that's the power of the narrative. I got bring value to the intangible, and the intangible is fed by the narrative. I will give you the golden rule of O&M.
Everything he does is high risk. That's in his personality.
But it's not high risk, it's beyond, it's quantum risk, because, he decided to do the stuff in Nevada.
I hope it's not the case. I want to change that. I hope it's not the case. But by the time I do my 12 rules on some podcast somewhere in 20 years' time.
But what can happen in a great scenario is exceptional.
Hello, listeners. This week we sat down with Laurent Segalen, and what a guy. What a conversation. You probably know Laurent from his stuff on LinkedIn and Twitter, or his podcast, Redefining Energy, with Gerard Reed, his co-founder. And Laurent has got some great insight. He's also really not afraid to speak his mind. And he's the first guest on this podcast who came armed with his top 12 rules for life. So he pretty much interviewed himself. My job is very, very easy. I hope you like it. We loved having Laurent in the studio, and do let us know what you think in the comments. See you soon. So I was thinking about the interview style for this interview, and I was thinking I probably want to be somewhere between Paxman and, I don't know, a therapist. Because when you send through your bullet points, it's like it's a bit like this is your life. We've got so much to cover today, but I mean, there's going to be some funny stories here. Are you sure you want to do this live on air?
Yeah, because as you know, I've got my own podcast where basically I'm, getting information and sharing conversation from someone else. And when I'm with Gerard, we're just bantering. And here, I don't have a lot of opportunities to reflect, and I know it's extremely preposterous, but yeah, why not now? At this moment of my career.
Well, let it all out. This is a safe space. You can lie down on the couch. We'll have like a big picture of Freud on the wall. Let's do it. All right. So, Laurent, thanks very much for taking the time to come visit us today. I guess we've got a whole structure to this conversation, which is going to be a lot of fun. But before we do that, let's figure out who you are. So, who is Laurent, and how did you get here?
Well, I got there by mostly accidents more than destiny. So if I go back more than 25 years ago, I was working at PwC on various environmental and compliance stuff, and the whole Kyoto Protocol arrived on my desk because nobody else wanted to, say, what is it? And that's how I started looking into carbon, and the whole stuff grew extremely rapidly. Basically designing the European carbon market for the European Commission.
When was this?
2000, 2001.
Okay, cool.
And that was the moment where they were also liberalizing the electricity market. So I organized the biggest simulation of trading of power and carbon, and literally every big guys, the RWE, the EDF, the Shell, trading on a mock simulation for months. And what's funny, because that was a funny story. At the time, everybody was calling me, saying, look, there is this company in the US, and we want to do the same. It's Enron. So how can we be...
How do we become Enron?
How we can become the Enron of Europe. Everybody wanted to become the Enron of Europe. And I'm on the stuff I was doing at PwC. It just grew extremely fast. I co-wrote the GHG protocol, and if people don't know that, it's where we coined the term Scope 1, Scope 2, and Scope 3.
Okay.
So I'm a bit of a... If you are struggling with what is Scope 3, we need another podcast to explain.
Scope 1's the easy bit. Scope 3 is the impossible bit, right?
Yeah.
Something like that.
Yeah, and Scope 2 is a weird story, but I don't think we have time now. So anyway, so I was really getting on the top of the action. And then at some point, a bank, which was one of my clients, said... okay, that's great, you talk about carbon and so on, but why don't you come and raise a fund and trade it? Because apparently you know what it's all about. And so I jumped from consultant to banker. So I became an accidental banker or fund manager. And for the next 3 years, which was like the mid-2000, my fund returned 26% per annum. So people didn't really know what I was doing, but 26%, that's fine.
The dangerous place to be.
Yeah, exactly. And it was look, I traveled a lot. I went 30 times to China, 15 times to India. That was really tough. And I was also going to all those COPs. So I went to COP 7, and now, there's COP 27. And it was COP 7, Marrakesh, and, we finished and said, yeah, we signed the agreement. And everybody was like that. And said, planet is saved. And I felt great. Now I see 20 years later. A lot of the same guys, by the way, are still working on...
But you were at COP before the bandwagon, before it was cool.
No, it was cool.
Oh,
we had a lot of fun. We had a lot of fun at the time. I think I went to 3 COPs and I said, okay, I'm next for the younger people.
Okay.
So anyway, I was at this French bank, and called Natixis, and the deals were just coming and coming and coming, and the fund was too small, so I had to spread the deals with a lot. And the only place where they could absorb some paper was in the city, so I was just spending half of my time here in London, and lo and behold, each of the guys around the table were making 20 million there, 30 million there, and so on. So basically, a lot of people made a lot of money thanks to my trade. So at some point, I was hired by an investment bank to, because I was not making a lot of money in France, and they proposed me something like 10 times more. Not 10%, like 10 times. So I said, okay, fine. And I landed. Unfortunately, it was the wrong investment bank because it was Lehman Brothers. So,
oh, no.
Yeah.
So were you in Lehman Brothers in the...
the day, yeah.
You were there on the day. Did it
accident. Yeah, always accident.
Did they give you a cardboard box that you had to take out with all your things in it? Or your Post-it notes and your Microsoft mouse.
I mean, when you see the pictures of the guy, a lot of but that was floor number 4. It was the equity guys. I was floor number 3, fixed income. But look, it was, the year and a half I spent there was absolutely fascinating because we were like 500 on the floor, and you had, not just what I was doing was electricity and clean, but then after you got the oil guys and you got the metals guys, and so that really learned me really to trade liquid, because I was trading a bit illiquid or invest. It's like on the cusp of investment and trading illiquid. Mm-hmm. Where here I got the flow guys, the option guys, and I really learned a lot of what is trading. And of course, then you had the guys who were doing the swaps and the interest rates and the currencies and pretty much everything you can imagine. So there was like this.
A buzz. I imagine there was a real buzz.
My God. No, and the great
Until
thing,
there wasn't a buzz, of course.
Yeah. No, but look, the thing is, until the Friday, we thought we would, be bought by Bank of America or something, and it never happened.
Yeah.
But to give you the excitement, there was this big bell, and every time somebody was doing 100,000 trade, he would raise and ding, 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 and everybody was shouting, yeah! Very testosterone. Probably old world compared to what's now. Everything.
Very Wolf of Wall Street. And then what happened after? So Lehman Brothers, of course, that was 2008, 2009.
Yeah. So we were bought by Nomura.
Yeah.
And but that was the moment where all the carbon stuff I was doing was not really. I mean, after the financial crisis, the whole stuff went down. Now I started to have some contact in renewables. I remember that lunch. I had 7 investors, and they were all telling me that they were doing solar in Spain. And I say, wow, when you have 8 guys who tell you exactly the same stuff, smell like a bubble. And of course it exploded because they were just, milking subsidies. And the only interesting thing I did at Nomura was, I'm not going to tell about my trip in Ukraine where I met the mafia and so on, which, by the way, are very nice guys, a lot of fun, but it really was... I was the luckiest trader of uranium. I managed to convince the committee that uranium was like a green electricity and so on. And that was before Fukushima, of course. And because I'm French also, well, now I'm Brit, but I was French at the time. I convinced the French nuclear Areva to open a physical account for Nomura. And it took me and they were antiquated, send faxes and everything. And before I was in French on the phone. And one day, I was the first bank who ever opened a physical
uranium.
Look, the warehouse was like super protected by the military.
But how do you take delivery of uranium?
So I was dealing with the mines in Namibia and also in Canada, Cameco, and I was trying to do Kazakhstan, but I was stopped before. No. So look, you have special transportation, and it's like, I mean, it's not just any container. You know, your certain boats can do that, and they are GPS tracked and so on. But you ship the what they call the yellow cake, which is like, you know, in barrels, and it's like 0.5% or something.
The chalky stuff.
And then it goes into those warehouses, and then it's processed by the whole HFC. I forgot. I mean, there was a lot of. I was just doing the upper part.
Clipboards everywhere, I imagine.
So the interesting thing is, of course, I knew nothing. And
that might be a theme here, Laurent, as we run through your 12 rules of life.
Yeah. so I knew nothing, but okay, I'm going to try to make it short. The day my people knew I had a physical warehouse, the phone started ringing, and I learned along the way that when people say "Bonjour, Laurent," they are in deep trouble. So anyway, everybody started calling me, and you know, I just opened, so I had lines, so I started buying uranium and so on and so forth. And then there was always the guy from Goldman Sachs and Deutsche Bank who were calling me. Said, "How did you get your stuff?" And the great trade was the guy from Goldman Sachs was much more intelligent than me, and the guy from Deutsche Bank was much more stupider than me. So the trade was selling from Goldman to Deutsche. Anyway, well, at the end, I feel then nobody calls me, and then everybody calls me back 3 months later, say, "Can I get my uranium back?" And of course, I managed to make 50 million on the whole stuff, and I didn't know why. And I learned 3 months later that the Contrarian mine in Australia had been flooded, and nobody had talked about it. So the uranium guy at the market was long. That's why they just dumped it on me, and then the market was short. Everybody took back. I made a lot of money without even...
Just storage, just uranium storage.
Exactly.
And a phone.
Yeah, exactly.
And a fax machine.
Yeah,
very
exactly.
Cool. And then where from then?
And then they closed the commodities department. I tried to create a hedge fund, which never went anywhere. And I would say 10 years ago was a bit in a dark place because what I used to do was kind of nowhere, you know. Very difficult to raise money. So what I did, I started brokering wind farm and solar parks, following the bubble. So at some point it was in the UK, there was Australia, Spain had disappeared and reappeared.
Operational plants or
No,
projects?
it was, I mean, the real trade is RTB, ready to build.
Ready to build.
So basically you have a guy who have a terrain, a connection, a permit, and then, you know, sell it. It's a bit of an originator. Generally, they are kind of small teams, you know, a few guys, and then they give it to developers who are going to do the EPC and so on,
Yep.
and themselves might reflip them afterwards, you know, once they are constructed.
Mm-hmm.
And it was a very, I mean, looking back, relatively easy because the permitting was much faster, connection was much faster, and everybody was making money because just the price of panels were going down. So even if you overpaid for your terrain, you know, the
cost curve meant you were in money.
Everybody served the cost curve. Like,
all right, cool.
Okay, so that's it. So that brings us to I would say 5 years ago, and then the whole world went, you know, the whole horizon, like, you know, okay, first there was carbon, then there was solar and a bit of wind, and then, you know, EVs started arriving and batteries and I mean, it's amazing, the expansion, the pre-Cambrian expansion of the energy transition is like from all over the place. And right now, so what am I doing right now is the question.
Yeah, that's the question I was going to ask.
Look.
What are you doing right now, Laurent?
Okay, so look, I have the privilege of working for my pleasure. I don't need to work I could stop working tomorrow. So that's a privilege I have, which means I have the choice to choose whatever I want to do and give it the time it requires. Because there's a lot of people, you know, they need to make it on a monthly basis or quarterly basis, but that's not my case. So, for instance, last year, 4 years ago, I had invested in a startup called Zygo. We were doing some power purchase agreement with a guy I like a lot, JP Serda.
Mm-hmm. Haven't met JP yet. I've heard a lot about him, but
he's great.
sold to Schneider, right?
Yeah. And against this accident, because I was against selling to Schneider, which at the end was the good thing to do. Also, I helped raise money for interconnector between Ireland and the UK. We just obtained the sign off by Ofgem.
Cool, congratulations! That's massive.
Congratulate the team, because I've done the deal last year. So, but I said they will obtain the Ofgem sign off, which they did. It's a great team. And this last year I invested with Gerard. It's funny because I was talking to someone and I was always saying Gerard. And after half an hour, the guy said, "But who is Gerard?"
He's your other wife.
Yes. It's exactly what my wife says.
We haven't talked about the podcast yet, right?
Okay.
So obviously you're doing the podcast.
Good.
If you're listening to this and you haven't listened to Redefining Energy or Minutes, which comes out every Sunday, then you're missing a trick. You guys have done a great public service, I think, of getting fantastic people on talking about energy transition issues and doing it you're willing to take risks in your conversations that I think a lot of corporate podcasts can't do. And I really respect that, what you're providing to the industry. So thank you for that.
Thank you.
We're going to come to the podcast later, but we're going to get onto the 12 rules. Otherwise, we're never going to finish this thing, right? Let's do it. And these 12 rules are incredible.
Okay, good.
So if you're listening or watching this, Laurent sent me an email last night and said, I want to talk about this, please.
Yeah.
And so lots of people do that for this podcast, but usually we say, no, it's our podcast, we'll do it our way. But yours is very unusual, and we're going to follow this whole thing. So this is Laurent's 12 rules. Is this for life or for careers or for the energy transition?
It's my 12 rules for investing, trading in the energy transition. Certainly not for life. I'm not a Freud or a philosopher or anything. So that's
12 rules. And you came up with this. I assume it wasn't last night you came up with this. You've
I
been
know,
thinking about this for a while. Right?
Yeah. They just piled up, and at some point I said, okay, Moses came down from Mount Sinai with 10. Then Robert McNamara, the 11 lessons. So I said 12. Well, 12, I don't know. Seems like a good number. Probably one or two are a bit weak. But that's it.
We could chop it if you want.
No. Some might be a bit weaker than others.
Let's do a dozen.
Or maybe I say something and then the opposite, which is not unusual.
Right, let's do this.
Number one,
go. Hold on. Before we get started, does number one mean the most important? Is it 1 to 12 on importance, or is it?
Okay, so I think the more importance are probably at the beginning and the end.
Okay. If you're listening to this, just switch off for half an hour and come back after for number 12. All right, let's do it. Number one, very, very important. What is it, Laurent?
Well, I've coined it the power of common knowledge.
Ooh,
that's and really it's in our industry. It's the fight for the common knowledge. They call that the Overton windows and so on. Yeah. It's the power of narrative. And the extraordinary thing is with the media, the social media and everything, it's literally everywhere. I was raised and did my studies before the age of internet, where you had 2 newspapers and, that was pretty much the end of it. And now it's people are bathing and confused, and also they can, be in a silo and really listen to what they want to hear. And the thing is, now I force myself to listen or read, and even stuff which are painful, like out of Houston, Texas, where you're going to go soon, and it's very oily, There's still so the importance of the narrative, and
is that what that means? Common knowledge.
Common knowledge is what everybody. Okay, the common knowledge is now climate change is real, and we need to do the energy transition, which was not the case 10 years ago.
Okay.
10 years ago, some scientists said that there might be a risk, but alternative energy are extremely costly. That was the common knowledge, and now so it's important because the common knowledge moves everything, drags everybody with it.
And there's sort of references where people don't really argue with those things because it's different to common sense, right? Although that is still important.
No, it's different. I think common sense must be another rules bit down. Okay, so what's very interesting is the value of companies. It used to be 90% hard assets, 10% intangibles. Mm-hmm. And now if you look at the value of the companies, it's the opposite.
That's what I was going to ask you about. You mentioned
so the that's the power of the narrative, because people are going to bring value to the intangible, and the intangible is fed by the narrative. Mm. So I've got a few examples here. So if you take the car industry, so you have this company called Stellantis, mm-hmm. which is the amalgamation of Peugeot and Fiat and Chrysler and so on, and you get Tesla. Last year, Stellantis did $16 billion of net result. Their market cap is 53. Okay. So it's like 3 times the results. And Tesla did 12 billion and market cap 650 billion. So you see,
the power of Elon.
Yeah. I mean, it's amazing.
But you're right. It's the power of the narrative, right?
Yeah. So that's
and common knowledge. Everyone knows whatever Elon does, he's going to smash it. Yeah. That is common. You don't even challenge that now.
Yeah.
I don't know who's in charge of the blooming Chrysler, Fiat.
Yeah, I know.
It's Tavares.
Yeah, it's Tavares. Without Elon, he would be the most celebrated guy. Unfortunately, Elon exists. But you know what he does for his pleasure is every Sunday he go and unscrew a diesel engine and screw them back again. That's his passion.
Wow, there's a lot to unpack there.
So common knowledge, and it's important that we win the narrative, because look, you like it or not, the fossil fuel industry, the incumbents, they have 20 times more money, lobbying than we do. But that's why I do the podcast, you do the podcast, we communicate, is to continue to push and win the narrative.
Very good. So we've got a lot of work to do.
And
there's a good quote in here that we've almost brushed over. Can we do the quote?
The quote, I don't know. I think it's Paul Martin, my friend. It's Tom. What you have to understand is that some people's jobs relied on them not understanding what you're telling them. So that's part of
part of it. Let's do number 2.
Two are very dear to my heart. A trade is worth 100 reports.
So just doing something is worth 100 times talking about it.
Exactly. And so I've got the 3 A's. And again, I don't want to disparage any people, but the activists, the academics, and I forgot the third one, activists, academics, and accountants. They a lot own the narrative. So going back to number 1, they have time for that. And at some point, talk to people who do stuff rather than talk about it. So I was talking to this great woman called Adela Ra. She's head of operation at Lysos BP, and she said, it's I don't know, people were talking about hydrogen or something, and she said it's teenage sex. The teenager, they talk about sex all the time, but they never do it. Sorry, Adele. But of course, that's my, the good and bad and the ugly. That's the famous quote, in the cemetery after the gunfight, and the bad is dead, and the ugly is now discussing with Clint Eastwood. And Clint Eastwood say, you see, my friend, there are 2 categories of people in this world: those with a loaded gun and those who dig. You dig. So, okay.
And digging's hard. Digging is hard. Like, talking about doing stuff just getting stuff done is just 100 times more painful than it looks every single time.
Yeah.
Every single time. A trade is worth 100 reports. I think you can make that trade is worth 10,000 reports.
Yeah.
Number 3, let's do number 3. And I've got, you can see this from the Space Center, the International Space Center Station. Prices in capitals.
Prices.
Prices.
Price.
What? Is that a rule? Can prices be a rule?
Yeah, because, look, there's a lot of investments which are proposed or talk about, or new technologies, and they're all based on the fact that oh, in 20 years' time, the price of power will be super high, hence we need to invest in that, or super low, so, there's going to be too much renewables, and hence, you know, hence the price of power, hence we're going to do clean hydrogen or green hydrogen for zero.
Oh, the old hence problem.
Yeah, the whole hence, yeah. So they're just people, making shit up in 20 years' time. And I will say, look, I mean, and that's somebody who was traded at books, I had to mark my books every evening. And, you look at the forward curves, and after 3 years, they're not very liquid anymore. So I believe in forward curves. Don't tell me in 10 years the price of this is going to be this or the price going to be that, because nobody knows. Nobody knows. And I can understand academics are making some, big rules, but, look, even just in 10 years, everything that has happened, the technological changes, the geopolitical changes, you cannot predict the future, but at least you can rely on forward curves. So that's it. That's and more generally speaking, I believe in the law of supply and demand. High prices are the best cure for high prices. Low prices, the best cure for low prices. So that's what I learned, trading commodities, and we're seeing that in the gas.
But that's all very well, but it feels like there is, and this is a bit of a deep conversation, but why don't we go there? But there is so much government intervention in power and energy markets, in particular right now, to support the right thing, which is that we need to get to net zero, and we talked about rule one, the narrative, right? The narrative is baked in, and now governments are stepping into markets to manipulate that outcome, hopefully happening faster than it would have normally. What do you think, from your perspective as someone who's been involved in markets for so long, what do you think about government intervention in these in markets in general, and then maybe a couple of examples? I'll put you on the spot here.
But I think that's already my rule 5, my rule 7, or my rule 8. But that's okay. Look, energy is not shampoo. You need to. There's no way governments are not going to intervene. Now, some governments are, in their DNA, are super interventionist, like in France or in Spain, and some governments, more in the north of Europe, or it could be Texas, are much more freewheeling. But anyway, governments need to make sure that energy is relatively affordable and there. And I remember when I was really young, in the late 70s, and you had the traumas of people pushing their cars, and those queues of, after the oil shocks.
Crisis, yeah.
My God, that's when governments step in.
Yeah.
And when the market is super long, generally this, they retreat and they let the markets sort themselves. So the government interventions are more of a reaction to crisis. And that's where they need to step in. But we end up like last year, where Germany threw 5% of its GDP, 5% of its GDP.
5% of its GDP on
to
what?
Subsidize fossil fuels. 5%. If they did 4%, you give me 1% of the GDP, I can save the planet. I can tell you. So that's, but because it's every people's day life. This is the way they move, the way they heat themselves. So
I'm just extremely cautious about this. I just think that every time, it's like whack-a-mole. Kind of government turns up and hits a thing, hits a mole in a market, and it just turns up somewhere else, and no one knows where it's coming up somewhere else. And governments like to do things for really long periods of time. And so you end up with whack-a-mole with long sort of time tail ends of all these moles coming up. But I get we need to do it. I'm just, I probably err on the free market side more than anything. But there's lots of ways to cut this one. Yeah. Also, it depends how, right? It completely depends how. There's lots of different policy mechanisms that you can use, some of which are heavy-handed and blunt, and some of which are very targeted and light. and there's a whole distribution between them. So it's a very difficult question for me to ask you because it's a how answer.
It's very difficult. Look, you can have super good government intervention like subsidizing heat pumps. That is great. Okay, that's government intervention, but you get your gas boilers out, and because heat pumps are a bit more expensive than gas boilers, and weirdly, electricity is much more taxed than gas, because they apply carbon tax on electricity, but not on gas. Guess what? That's good lobbying from the fossil fuel industry. So, look, you don't have the choice between zero government intervention or max government intervention. There's always government intervention. There's more when there's a crisis. When the market is managed to supply clean, cheap, and secure energy. Government has other fish to fry.
Let's get back to it. Number 4 of 12.
Critical.
I've got the word scaling here. What do you mean by scaling?
So there's this book which just came out called How to Build Things, or how big things get done, and it's absolutely fascinating, which is something I kind of understood intuitively, but now it's kind of, the guys prove it. And in our desire to do the energy transition, you've got the old school who say, okay, let's build cathedrals, nuclear plants.
Hinkley Point Z.
Hinkley Point Z, or carbon capture and storage. So you take a cathedral, which is refineries, and you're going to hook cathedral on the top, which is a carbon capture and storage plant. That is like big projects outside, one-off. And I had this discussion with the CEO of Uranium, nuclear fuel, and he said the problem is these big nuclear plants is it's like you build an airport every time.
Yeah.
And of course they want to do the small reactors, which would be airplanes. I don't know which great consultant has Grace. Oh, you go from airports to airplanes. Okay, that's it. Problem solved. Thank you very much. Yeah. So and if you look at every innovation which is working now, whether it's wind, solar, batteries, EVs, are just manufacturing, quantities. Stalin used to say, I hate Stalin, what a butcher, but he had good quotes. He had some. He was a horrible person, but he had some humor, and he said, quantity has a quality of its own.
Yeah.
People learn with quantity. They just adapt. They make mistakes. The price go down. So that's what you've seen with solar, battery, EVs, everything. Whereas you don't have that phenomenon for those big, one-time nuclear or CCS or gigantic hydrogen thing. So they're never going to learn.
The learning of those kind of projects. It's like intergenerational, right? The feedback loop is it's just so big and cumbersome. I don't know. It's hard to see how in Hinkley Point C we're going to make fast enough step changes along the cost reduction curve in doing that lots of times to get the cost down.
I can tell you, in France in the 80s, they were putting online one nuclear plant every 3 months.
Incredible.
Yeah, but you had young people in the 70s. The most prestigious place to do engineer was the nuclear. They had the best students. They were young, and they were just, churning new nuclear plants like never. So really, I don't know if the price went down, but at least they managed to get the price stable, and that's why we still have.
The program delivering on time.
Yeah.
What's there's the guy who wrote Skin in the Game. That guy. I'll put it in the show notes. But he has this theory that with mega projects, big projects, the longer the period. So as soon as a project is late, you think the longer after it's late, it's closer to being finished. And he says no. The longer delay there is, the further away you are actually from being finished, which is the opposite way that your mind thinks, right? You think we're already this late, we're going to be really close now. And actually, with the bigger the project, the more that actually isn't true. It's true with bridges, tunnels, nuclear plants, loads of stuff. We're not here to bash Hinkley Point C.
No. But
that's a very tricky project, by the way. Who's winning in Hinkley Point C?
Well, first, in Clay Point, I thought the British taxpayer, because I'm French and British, so the British taxpayer had the wrong side of the trade because they had to buy, and of course people say it's £129 a megawatt hour, but it's from 2012 plus inflation.
Yeah, 95, 96.
Yeah, but now if you look,
Yeah.
we're going to go to 200.
Yeah. So
with inflation.
At the time, that looked expensive.
Yeah, already at the time. Yeah. But now, even with that wonderful gift, they're going to explode the budget. So now it's the French taxpayers on the hook. So, after Brexit, like we're in it together. We both lose in Clay Point.
There will be a meeting at some point where the big heads get together and say, okay, Art, we'll split that one 50-50, we'll split that one 50-50. Let's see.
Okay, let's see.
Let's come back to your rules of life, rules of living your best self with Laurent. All right, number 5.
It's just one thing about scaling, because the scaling thing is not just for the industrial part, it's also the financial part. It's there is this say in trading, which is liquidity begets liquidity. The moment you create a liquidity pool, it just attracts more liquidity. And okay, so I'm going to give you an example. I was in the French bank and I was in the elevator and I was super cocky because, I just had raised 140 million euro, which is probably like what double now, but it was like the biggest raise and at 9 months, and I was happy. So I was like, hey man, So I was in the elevator and come this young guy, he looks like with mother milk still wet on his face. He came from the trading room, and I tell him, look, man, it took me 9 months, but I raised 150 million. And the guy say, I raised 4 billion this afternoon. I say, oh. Of course, he was trading bonds, government bonds, but that's liquidity. And somehow, say, how can we, if you want to save the planet, de-risk the investment in green so that we press a button and we get the million. And we talk. Elon Musk, he did it at some point. He raised 5 billion for Tesla in 24 hours. And I said, guy, wonderful.
5 billion in 24 hours?
Yeah.
I bet it wasn't even that many phone calls. I bet it was 10 phone calls or less.
I don't know, but when you manage that, we win. We all win. Because we are de-risked. We're back to scale.
Back to scale.
Of course, and then after you've got all the horror stories of the SPACs and so on, where people raised much too much for projects which were like not suited. But, that's capitalism, unfortunately. Okay, rule number 5.
Rule number 5, again, in capital letters. Tech.
Tech, yeah.
Tech. What are we talking about here?
Tech. Look, there was this movie about 10 years ago with Matt Damon called The Martian. You remember?
Yeah. I remember that, where he's got the little mirrors and he's communicating in slow time.
Yeah, great movie. Well, about a stranded astronaut on Mars, and it was written by a guy who really went to see the NASA. So everything was kind of realistic. And he said, great line, we're going to science the shit out of this. And, I believe it's tech who's going to save us from, the energy transition. And again, it's okay to sue the oil companies and so on, but, they have a thick skin. And you can ESG everything you want. You realize that a lot of the dirtiest assets have simply left the stock market and they are in hedge funds or owned by the state of India or, whatever. So, and again, nothing against the whole ESG movement, but you really want to get out, it's tech. And probably goes to, the thing at the bottom, emotions. You like this?
I love it.
Okay, say it.
It's your phrase. I can't say it.
Oh, come on, you can read it.
I can read it. I can do it in a French accent if you want.
No, please.
No, I'll leave that to you. Emotions lead to ambitions. Ambitions don't reduce CO2. Strong start. Returns drive investments. Investments reduced CO2.
Yeah. So tech. And look, I hear Tony Seba, the futurologist, who's kind of said 5-6 years ago, everything's going to be electric and so on. And so he got it wrong, but in the details, but I like the vision. I like the vision that it's tech. And maybe I'm a tech optimist. What I've seen during my whole life is that tech and new investment and new people and more digital, that is what's bringing progress. Sorry. So
you've come to this podcast pretty teched up. You've got 2 phones, identical phones. Identical. I assume a burner phone and a
no. One doesn't have a chip. It just works on the Wi-Fi and the iPhone 10. So it's kind of old.
All right, number 6. Innovations do not come out of nowhere.
Yeah.
What does that mean?
Every day I receive 10 guys who have found the cure for the new batteries or the new this or the new that, and of course they say, I'm the first one. And what we've seen, if I look back 30 years, there's been just one big innovation per decade. So I would say in the 90s, that's what they managed to coin wind, and then the whole decade after that was the development of wind. The 2010, so the decade of the 2000, that was solar, and then starting in 2010, you had the development of solar, the big ones, and during the 2010s, that was the batteries, probably even more, because I would put batteries and heat pumps, which were like being debugged and so on. And guess what? Then our decade is batteries and heat pump with hockey stick curves. So there's not a lot of innovation and scaling, and you kind of see them from far away. And everybody arrive, I reached the tipping point in 3 years. No, you won't. Because all those innovations, they've been 20 years in the making.
Yeah.
So that's what I'm trying to say here. The innovation don't come out of nowhere. And, you were talking about, public money. Generally, there's also some public money which is kind of mixed around. And that's where government intervention are good.
Well, let's do that one. Number 7 is about public money, right? It's public research and development is good for innovation.
Yeah.
But it's up to the market to scale. This is rule number 7.
Yeah.
So what does that mean?
Well, there's a quote from Jigar Shah, which I, of course, a lot of respect, and it's very interesting what he's doing at the DOA loan. The department is, I don't know, he has like 400 billion or 700 billion, and his job is to finance the first plant. Because once the first plant exists, you have it becomes bankable, and the rest, can come in. And it's absolutely fascinating because...
What sort of plant?
Right now he's investing into, redwood materials, are doing the first recycling plant of batteries or the first carbon black or the first big hydrogen. I mean, he's never going to finance a gigafactories because they are, thanks God, Elon Musk has done it for us. I don't like to say government have a role to play, but I would say there are moments in the scaling that, governments can really do great things. Really do. And sometimes...
but governments are pretty bad allocators of capital in R&D spend, right?
Yes, but sometimes you have good surprises.
Yes, exactly, yes. I'm not saying we should pull the plug on R&D spend by any means. I just think there's so much work to be done in where that money goes.
Look, in the US, you see some VCs who are investing in stuff which are like, wow, or ooh. Like nuclear fusion, wow.
Oh yeah, I read something. It's like $5 billion last year was raised VCs for nuclear
fusion.
For
then they realize they don't even have the fuel because it's made in Russia.
How much cash are these guys willing to how much are you willing to fund something?
Well, the question is it the headlines? Do they put $5 billion in a bank account, or they say, okay, I'm going to give $5 billion in installment, but you need to report every quarter and we can pull the plug whenever we want.
You need a lot of runway for fusion to make that work.
But look, it's great. Now, at the same time, you have this stupid stuff called ITER in France, which is the first the tokamak or something they want to do.
We got one too, right? We got one down in Oxfordshire somewhere.
Yeah, but it's a small one. In France, they decided to be a big one.
Have you been?
No,
It's blooming massive.
You mean the one in Oxfordshire?
Yeah. What's it called? The tokamak there. Yeah, where they put the plasma and it spins like a donut and it lasts for like microsecond.
Yeah. It's a nice story. How much? 20 billion. Oops.
Right, it's going to be ready by 2040. Actually, if you ask the experts at the tokamak, it's going to be ready. I'm backing it. I love it. Floating plasma, big magnets. It's all the good stuff.
And you know what? If we reach 10 seconds, it's going to be a massive breakthrough.
It is, yeah.
Massive breakthrough. I mean, no wonder the fossil fuel guys are supporting that.
Because it's
we support.
Yeah.
So
Okay.
Look, it's difficult, and at the end of the day, that's why it's also. I go back to common knowledge all the time. We need to, make sure that the people who are allocating that money. I'm not saying be smart, but be half smart. That would be great.
I think I don't know whether it happens in other countries, but the problem here is the game of getting government. So Modo, we've not gone down the route of getting government grants and all that stuff. We looked at it, and it seems like it's a game of how well can you write a paper asking for the money, rather than how much do you really need the money to work on R&D. And that whole chain has got to be broken somehow, because the amount of writing a 10,000 word application where you can get a consultant in who's pretty much like no win, no fee, going to get you the money from the government is just not cool. That is not a good way to do this, I don't think.
Yeah. Okay. What can I say?
You should make it one of your rules that we should change this.
No, make your 12 rules. Okay.
All right, number 8. The wave is more important than the surfer.
That's a super important one. And that leads back to my story about uranium. I was a very lousy trader, but I caught a beautiful wave. And there are other times in my career where I was on the top of my game, but the market was like, nah, no volatility, no nothing, just, sliding to 12, the power market, which is going down, just like this. And no matter how good I was, nowhere I could make money.
But there is a skill in finding the waves, right?
Yeah, it's called diversification.
Yeah, well, yeah.
No, but look, Modo, you're on an amazing wave. You are the master of time and data on a market growing by 30%, and you don't have any competition. So, yeah, you are. Are you a great surfer? I don't know, but you're certainly on a great wave.
I'm from Birmingham, right? So we've got canals, but there ain't that many waves, unfortunately. So yeah, complete luck.
And also it means it's very tough to be contrarian. Because a contrarian goes against the wave and say it's a bubble, it's not going to work and so on. And that's why a lot of people try to be contrarian. But it's a very special mindset, Generally, whenever you enter a market, you're bullish. You want to develop this, build stuff, buy stuff. And the short is like, man, no. No, it works. If you look at, sometimes it works. You look at the story of Adani. And of course, in hindsight, everything, yes, of course, it was clear.
But then you look at, what's his name, the New Yorker with Herbalife, right? Have you seen that? That documentary? And he just became more and more underwater. I think Herbalife Herbalife survived, right? It's a business that's still... I should probably put a disclaimer on this. If you're listening from Herbalife, there's something you need to read.
Okay, so let me give you when we reached the peak of oil, I had bought a lot of carbon paper at, I don't know, at 5 to 8 euro per ton.
What's carbon paper?
CR.
What's that?
It was a carbon emission reduction that I bought from China or India based on renewable investment they had made, or methane capture.
A certificate.
Yeah, exactly.
Yeah.
So I had bought a lot at 5 to 8, and I hedged myself on the market at 15. So beautiful trade. The problem is the market was following oil, which went to $140 per barrel. So my hedge at 15 become 16, 17, 18. And the thing is, I'm bleeding on my hedge, but because I've got a physical position, I cannot mark to market it. So I was just, my hedge was killing me. And at some point, I was just saying, no. The bubble's going to pop. The bubble's going to pop. Every day. And every day you had a guy say, okay, you lost another 2 million today. 2 million today. At some point, I capitulated. I had to buy back a bit of my,
And then what happened? The next day?
And then, of course. And it's just, that's, so again, the wave, it's, it's also called a trend is my friend. It's, okay. Rule number 9.
We're on number 9 now. This has gone fast. And I want to, so it says folks never do business with, and it's all about trust, this one, isn't it? What do you mean there?
Never do business with a desperate man.
What happens then if you do business with a desperate person?
It's just, look, there's a lot of emotion who gets, is it charity or are you just a scavenger or, it's always messy. So, and some business grow, some business die, and generally the disappearance of business is a personal drama, and it's very difficult to intervene as an outsider in those moments, and of course emotionally at some point you want to do it or not, but from a financial perspective it's just like, just don't do it. I mean, just that's it.
But you've got also in here who you know versus what you know, and the value of trust. What do you mean?
Total. What you know evolves all the time because thing changes, price changes, tech changes, circumstance changes. But who you know stays, and the quality of the relationship and trust you build over the years. Because right now I'm working with people. People propose me deal all the time, but say, you don't understand. I'm working with people I've known for at least 10 years. 10 years in the making and in the assessing each other and, building the trust. And I'm going to invest in JP Serda, a new venture. And he pitched me in a WhatsApp. I said, okay, I get it. I'm in. Don't send me a 30-page deck. I trust you. Trust is like virginity. You only use it only once. So trust. I have trust.
There's something nice about this, but there's also it's very exclusive.
It is,
right? And
that's an old man talking.
I like to think the best product wins or the best idea wins. But that may be because I'm just a naive whippersnapper.
Look, it's a mix. But if you look at Facebook, they bought the products. They never made any products. If you look at Microsoft, they bought the first operating system. They bought Android. So who won here? The guy who designed Android sold it for 50 million, or Microsoft who made it a multi-billion-dollar business.
And now they're buying OpenAI.
Yeah.
But that's a not-for-profit, so we can't.
not yet for profit. So look, it's. I tell you as I see it, and you're right, but that's probably with age. With age.
I hope it's not the case. I want to change that. I hope it's not the case in the future. By the time I do my 12 rules on some podcast somewhere in 20 years' time. Number 10, know how to value time and optionality.
Yeah.
How do you value time and optionality then?
Okay, so optionality is whenever you do a long-term trade or long-term investment, the whole idea is that something called the skewness. So what can happen in a bad scenario is low impact, but what can happen in a great scenario is exceptional.
Yes.
And so it's very important every time you deal with uncertainty that the downside is significantly lower than the potential upside.
Yeah.
And when I was trading, and I was not very good at the math and the Greeks and the gamma, but I was good at spotting long-term trade. Okay, if they never pan out, my premium, my investment was very low. But if they hit a trigger point, I would have like outsized return. And so I've done one or two like this in my life, which were like, well, other people made the money. Had a pan on the back say, "You've been lucky." So no, it was really designed and everything.
A commemorative tie.
Yeah.
Asymmetric bets then. Asymmetric bets.
Yeah. Really, yeah. It means, and of course, time is very important, because if you want to make an asymmetric bet, but it's in 6 months' time, people are going to price the asymmetry, so you're not going to make any money. Whereas beyond a certain horizon, people don't know how to price asymmetry. It's, we go back to prices. You're you're in the fog here. So the way you need to organize and time is going to become even more important now that we have inflation, because you used to have zero inflation. So in a certain way, you put your cash, and you still have your cash, zero. But here, you're down 5% per annum, which in 5 years you're down 25%. So you need to do something with it. So time become expensive. And so just saying, whenever you trade, think about time.
What's nuts, right?
Sorry?
So I'm 32 years old. Right? I was born in 1990. And ever since I was an adult, so available to get credit has been 0% until the last couple of years. Obviously, there's various ways where it doesn't really look like that. But my whole cohort of friends and peers have only lived an adult life in a world of 0 or close to 0%, which is a mindset which is very difficult to get out of. And I think we've actually got a generational issue here of thinking we may never go back to 0, 1, 2% interest rates. In fact, if you think about, we could go down a rabbit hole here, but the distribution of wealth and opportunities and outcomes and all that kind of stuff, actually that's probably not a good thing, because it expediates pretty bad distribution of those things. So just a comment really, which is we've got a whole age group of people of a decade who only know this thing, and watch out how they behave in their lives, in their market, in their careers, based on that almost, how to describe it, reference point. The risk-free rate really is 0 for us, for a decade of us, and that ain't true. There's nothing about that that's true.
No,
nothing about that that's true.
No, but the thing is that there are 2 generations of bankers who started in the early 80s with like interest rate at 16% per annum, and then they went down non-stop for 30 years.
And they got the opposite problem. Yeah.
So no, basically they made money because as the price of interest rate goes down, price of bond goes up.
Yeah.
So there are people who made their whole career on declining interest rates. So it's not just the young generations, even generation before. We learn what's a bit more expensive.
And now we're coming into the gold, right?
The golden rule.
The golden rules.
The golden rule.
11 and 12, they're kind of connected, aren't they? Let's do this. So 11, you've written the final golden rule, but
final.
Obviously it's not, so we've got 12 to come.
Yeah.
What's happening?
Well, I do the trick. I do the trick sometime in seminar or conferences where I feel I've got an audience which is hard to move. And so I did the trick twice. I think I did the trick for wind or a trick for solar. So there was the panel was like something about O&M or like very
exciting stuff.
Very exciting stuff. And I say, I will give you the golden rule of O&M, but at the end of our talk. So we have the discussion, and then I see people starting to move. Say, what's the golden rule? What's the golden rule? I say, the one was the gold rules. You can do the same trick for wind or battery or anything. And it's sometime,
I'll make sure to reference you if I do.
No, it's not from me. I don't know where I got it, but it's like
There'll be an reference.
We people who are in a certain way trading or investing with other people's money, as long as we deliver, it's fine. But at the end of the day, never forget that the one was the gold rules, that your board or investor, I've seen CEO removed overnight because the people who have the gold rule. So it's just...
Wow, that's harrowing, isn't it? I don't want to think about that.
No, but keep that
right
in
now.
mind. No, keep that in mind. We are not owner. The owners are the owners.
Yes.
Okay.
We work for
Which
them.
We're just the manager. Yeah. No, but I mean, if you're a shareholder, you have both roles. But there are a lot of cases where the manager thinks he's the owner, and always have the humility to remember that you've got owners behind you. And as long as you deliver, you'll be fine. But you won't be able to get away with everything. Let's not talk about the past. Let's talk about the future. That works once,
yeah. Just one more quarter. One more quarter, please.
Yeah.
All right. So
I put IDA because that's on YouTube. It's the 8 minutes marketing speech by Alec Baldwin in Glengarry Glen Ross.
Mm-hmm.
You never seen that?
No.
Oh my God. It's like, IDA, attention, do I have your attention? I, are you interested? D, have you made your decision? And A, action. And it's a theater play, and it's an extraordinary marketing course. It's the ultimate marketing course. It's hilarious, of course, and of course now Alec Baldwin is a bit of a problem and so on. So I even wonder if there's not the other guy, I forgot his name, Kevin Spacey. But okay, but that's the 90s.
We've done Stalin.
Sorry,
we've done Stalin, and we're now doing Baldwin and Spacey.
I'm going to show you. Okay, the disgrace, but at the time they were big.
Okay, all
we
right.
didn't know. Sorry, 12.
12.
The most important. Oh.
And this is just what is this quote? Is this just?
I know this one is a quote that happened to me. I was trying to raise a fund 12 years ago, 10 years ago, and I had all those brilliant mathematical, structure and wonderful trades would produce so much, and I knew so much and so on. And I was in front of a high net worth individual who looked at me doing all the 7 veils dance, and he looked at me and said, "If you're so intelligent, why are you so poor?" It's like it hit me like a bus.
And so, what does he mean by that?
Well, it means okay, you're a big brain, but you forgot. In a certain way, you probably took too much time working your expertise for other people. So you're down to a very simple rule, which I believe is the most powerful sentence in business. It's, what's in it for me? And what's in it for me? Because every day I receive proposals, and I see what's in it for the other guy. That's for sure. Basically, he wants to take my money against a nice fairy tale. Am I going to believe or not? And it's the first question I ask is, sorry, I understand whatever you say, but what's in it for me? What's in it for you? That I can see, but I don't see what's in it for me. And so I'm not, okay, maybe it's a bit egoistic or so on, but I would say somehow in everybody's head, never forget to ask yourself the question, always. When something being proposed to you, always, okay, what's in it for me? And that's going to help you a lot. It's a good filter. It's a good filter.
And we've got a couple of things that didn't make it in. I want to touch on them.
Yeah.
We've got Ronald in there. We're doing all the big names. What's this quote that you've got in there?
Which one? From Ronald Reagan?
Yeah.
It's great. If you're explaining, you're losing.
What does that mean?
It means there are a lot of things which achievements you do kind of speaks for themselves. So you need to let your achievements speak for themselves. You've done this, or you've done that, but basically Modo speaks for itself. If you start having, to go into 15 minutes explanation, you already lost the people. So that's what it meant in a certain way.
I wonder what that was in reference to when he quoted that.
I don't know,
because he had a lot of explaining to do as well.
The thing is, it's fascinating because I remember, of course, the 80s very well, and he was loathed by a number of people, but he was worshipped. Very, very, very divisive. Now, I mean, you've seen that stuff. It's U.S. politics. You've seen that stuff with Donald Trump. But I don't think there was anything to salvage in Donald Trump.
Yeah.
I think the guy was really awful. But Ronald Reagan, I remember when, I was 16 when he was elected, and America was really in a deep shit. They had lost Vietnam. They had 2 oil shocks. I mean, Carter, poor guy's going to die, but it was a bit of a disaster. The Iran Revolution, the Soviet invasion of Afghanistan. I mean, the US was nowhere. Really, I mean, at the time, I went to see not the Berlin Wall, but the border between East Germany. They asked us to stop. We went out of the bus. They asked us to stop because the guys on the Mirador, they were shooting the guys. And you would see the same road on the other side of the fences, and you see village and people living in jail. That was communism. And when I was young, people tell me, communism, everybody communist, it's not a question of if, it's a question of when. And Reagan, he said, no, not going to happen. Of course, 10 years after, the Cold War is won, the Berlin Wall falls. Remember that? I cried all night long when we saw the Berlin Wall falling. But again, it's my generation. People take that for granted. I can tell you 6 months before, if you tell me, oh, the writing's on the wall, the Berlin Wall is going to... Nobody had a clue. We thought the damn stuff would be there for the next 20 years.
Yeah, the way that you look back in history is if like the end was in by the late 80s. You saw some, West Russian, West Bloc, Eastern Bloc, but west of Russia states starting to fall and revolutions. It seemed, in hindsight, it looked obvious.
Not at all.
Wow.
No, a lot of stuff happened. You're like, shell shocked. I'm not, September 11 or the great financial crisis. Yeah. You look back and say, yeah, of course. But you're in the thick of it. It's like boom.
Your mind plays tricks on you, doesn't it? And we've got one more. Oh no,
you got one more.
You got an Elon quote. We started with Elon. We'll come back to Elon.
Yeah.
What's this one?
Well, look, and again, I don't want to judge whatever he says. I'm just concentrated on whatever he does. And what he has achieved the past 15 years is nothing short of a miracle. Because the guy is in 30s, he has 150 million, and he could just go, in the Bahamas, drink daiquiris and have a good life. And he decided to put half of it in Tesla, half of it in SpaceX, and guess what? 15 years later, he is the only space company. The guy started in a...
Jeff Bezos, he's got his little little thing.
Come on, he makes one rocket flight per week right now. It's like a bus. Okay, it's even boring. And he started, and there is this extraordinary the space magazine, and you see the guys working on the Falcon 1, like 3 guys in the warehouse. They say, is it a threat for Boeing and Lockheed? And yes, it was.
Yeah.
And so he managed, because not only is crazy, he has a tolerance to risk, which is absurd. And any company will say, oh, new technology, okay, I'm going to allocate 5%, no 4%, no 3% of our capex. And the guy says, I'm going to allocate 100%.
Yeah.
So that's extraordinary. So just space, that would be great. Plus he does Tesla. And Tesla is, of course, the cars. But look, even we are in the battery storage. What he did, I mean, people forget, but the Onsdale battery, you remember the
Onsdale, yeah, of course.
Yeah, the whole story of the Onsdale, where he tweeted...
100 days, right? 100
days
100
days or you don't pay me. And he delivers in 92 days. And that broke the ceiling, because all the experts, 100% say, not possible, never going to happen. Build a new gas turbine. So he managed to smash and create the market we are thriving on. So that's him. And of course, if you want to say all the mistakes he done and all the blustering and stupid stuff, and even Twitter, you're right. But I look at the result. The guy has created one 650 billion company, another one which is 200 billion, the space, and Twitter, I don't know. I don't care.
Well, look, you have to make huge, risky bets to make those things, to make those kind of outcomes.
Successive
exactly.
one.
So no wonder there are loads of things he says and does which fall flat, or even worse, wind people up or whatever. Because everything he does is high risk. That's in his personality.
But it's not high risk. It's beyond. It's quantum risk, because, he decided to do the stuff in Nevada. But the stuff, is plant in Nevada. He doesn't have the money for it. So that's why he does the deal with Panasonic. So you need to have a good, to take money from Japanese, you need to be smart. But the guy said, but the plant you're going to build is bigger than the whole plant combined.
Yeah.
And, and he's done the math that he needs to make it that big in order to get sufficient batteries. And then he decided, and for me, that's the most important thing. And nobody really talks about it, but it's the move to China. Because the Tesla Shanghai, that's where he flips from loss to profit, and he never lost money. But the plant from a football field to getting cars out of the door in 11 months.
Yeah, it's incredible.
In 11 months, he built the plant, he bring the machines in, he hire the people, he get the supply chain, and he does all these things together, and then the cars are out of the door. 11 months. If you ask Volkswagen or Stellantis or whoever, people will tell you it's 5 years minimum. And no. So here it's like, wow. And so I think it's easy to bash him, but it's people. Look, I read books on him, and Tesla is a great success despite Elon Musk. Say, come on, man.
And now I want to wrap and go to talk about your podcast at the end.
Yeah.
Because you've interviewed some awesome people on the podcast.
Yeah.
A lot of us at Modo, I think most of us at Modo are regular listeners to both. And I wanted to ask you, because when you start doing a podcast, for me, this has been a hell of a journey, right? We're on episode 50 or 60 or something now.
Good. You're doing a good job, huh?
Well, thank you. That's very kind. But you learn a lot about yourself and interviewing people. You learn a lot about the process. You get a lot of feedback. Sometimes you can get kind of stuck in yourself thinking, oh, we're doing the right thing here. Was that right? Was this wrong? How's the journey of doing a podcast been for you? And then could you talk to a couple of guests? Okay. I'm putting you on the spot here that you felt really changed your thinking or the podcast.
Okay, good. No, first, the podcast exists because of Gerard Reed and the interaction we have. And we were in the pub 5 years ago, and we're having our great discussion about things and so on. And I said, I don't know who said it. But one of the two said, our conversation is so amazing, we should record ourselves because people might benefit from our wisdom. So that's how it all started. It's just two guys drinking in a pub and not say we're going to create a podcast. It's we're going to record ourselves because we're so great.
This is great content.
This is great content.
Yeah.
And so that's how really it started. And then, of course, the next day you need to Google how to make a podcast, how to buy a mic, how to YouTube, how to upload, how to edit a podcast. And that's really how we started. It started one episode a month, and after 6 months, we say, do we continue or not? But then we started having good feedbacks. And the first time we took a guest was after a year. In fact, we did 12 episodes, just the two of us, took our time. It was a bit of a part-time. It's not, it didn't take too much time to do that. And then the stuff started picking up, and then we get more serious. And of course, I think the big moment is when we decide to go 2 episodes a month. So it means, you create a logistics around. It's not like you're on the 28th of the month and say, okay, Gerard, let's talk for half an hour and then, wrap it up, and that's going to be it. So.
And what about all the other work? So this conversation, as you know, the conversation is 10% of the work, right? There's all the scheduling and ideas and all the pre-podcast calls and recording, and we've got the wonderful Izzy to do that. Who does a great job. Who does it for you guys?
It's me.
It's you. See, it's all.
It's me. No, it's Gerard.
There's a lot to do there.
Yeah, but it's a bit of a mom and pop shop. And so, but you learn over time, and kind of have a list of 50 guys or themes. It's more by theme that I want to, and then people you meet, and you're gonna come on our pod. And at the end of the day, we're not making a Wikipedia page. We want a good conversation, and we know that when people listen to podcasts, their attention's lower. So there's no point saying. We went from 42.5 to 69.2 and, throwing numbers or throwing jargons. I learned that at the beginning. I had that person from, Cummings. And she said, we went from the GPSBD to the Z, using those acronyms. I said, yeah, of course, sorry, I have no idea what you're talking about.
And you log into analytics and you see all the drop-off.
Yeah. So look, if you look at, we had CEO coming, some were great, like Jackson of Autopus. Some were like, because, you know, you're the corporate guys and they had to read their talking points. And every time you wanted to ask something a bit, you know, a bit more sharper, this guy say, no, you can't really say.
That's a real problem, right? We have that too.
So the great things are episodes which, you know, we don't choose people because they are CEOs. We had great times with Paul Martin, for instance, who came twice.
Paul Martin, the hydrogen guy.
Yeah.
Oh, I love him.
We had such a great time with him, and, you know, a lot of downloads, and we learned like so much. And then, of course, everybody started working around what he said. And, you know, Michael Liebreich, ladder, which is excellent. Well, it's just physics, you know, same reason, same conclusion. And we tried to get some, also young people. We had who were working on offshore wind farm, but that came through renewable energy. So the podcast has become to have a life of its own. You know, he creates his own identity. So it's not like I want to do it, or it just seems natural. The things have to fall in place. But we want young people. We need to have more women on the show. Men, they're like me. You know, women, I need to convince every one of them, and they prepare too much, and I need to reassure them. But then after, the shows are fantastic. So I'm always working to get more women, and a younger person who thinks differently, or they're much more digital, much more agile. And so that's it. And it's a bit of a big Caesar salad. And the value is more the globality than each episode one by one. And sometimes I've got great episodes which don't really download, and sometimes I've got episodes which are and guess what, they download like crazy, and I don't know why. But I just want to create this common knowledge, and we continue because people say, oh, we like it, and that's enough for me, well, you've got a sponsor now, right? Yeah, I've got a sponsor. But Aquila, they're great. But the thing is, it costs, as you know, it costs to do. So at least it doesn't cost us. Yes. To do, because I've got some post-production and stuff like that. But it's really not about making money. And of course, I have to say, we get a lot of recognition. So we get a lot of influence. When I contact some people, they know who I am. So that's, that helped me. So it goes both ways. It's a two-way street, definitely. Yeah, exactly. So, and frankly, we're surprised. Now we're at, 750,000. It's like, wow. And 750,000 what, sorry? Downloads since inception. Oh, wow. Yeah. That's a lot. Yeah, but it's like... That's a lot of people cooking their dinner or on a plane or walking the dog or with you in their ears. Look, we've been lucky. I don't know if we are a great surfer, but the wave is... the wave. The wave, it's all about the wave. And I want to finish on your last quote, which I quite like. I don't know whether this is you or whether this is Anon. Oh dear. But it's got your name at the end of it, so I'm going to go with it. So a quote from Laurent, and we'll finish here. Work is 1% inspiration and 99% perspiration. Yeah. And with that, we're going to finish there. Thanks, Laurent, for coming on. It's been a pleasure. My pleasure.